Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos. In 3, 2, 1.
I don't know what that was. Welcome to Own the Chaos. My name is Brad. The stock market, and that's Fat Man Zoom. The stock market's crazy and chaotic. We made it our mission to help you guys own it. It is Bounce Back Tuesday. Feels good today, Fat Man Zoom. But before we get into any of that, why don't we hit everybody up with the starting five?
Starting five is housekeeping. Arnie Vonneker, Me Maroon, Savvy Money Show, and Jenko. You are starting five. Welcome to Own the Chaos. This is Stock Market Live. So every Monday through Thursday at 3:30 p.m. Eastern Time, we go live and discuss what's going on in the overall market, which today there's definitely a lot to talk about.
Yes.
And then we talk about specific stocks, headlines, moves made in the account. Make sure you guys hit that thumbs up. I want to check in with the Chaos crew. My people, what's up? We got some people making moves. Housekeeping said he purchased 5 shares of Crocs yesterday at 117. It's pretty good, been pretty good to me. Got some Under Armour. We got some people talking about MRO, Marathon O, which has been on a run. Arnie Vonneker bought the dip on ASML. That's basically the conversation that's going on, which is like people buying dip on things. Obviously, tech came back strong. We're going to get into that topic. We're going to talk about tech as a whole. We're going to talk about the overall market, and we're going to really discuss, are we in the clear? I think that's the basic question. Are we in the clear? Is it time to continue to scoop stuff up? And what in particular should we be looking at? So guys, make sure you stay tuned. Again, give us that thumbs up. Hit that early so we don't have to worry about it for the rest of the ride. As we discuss these topics, feel free to throw in the chat any questions you have regarding that, and we'll try to get to those questions or comments as well.
Yeah, man.
What do today?
My stock market portfolio, my market portfolio is doing fantastic.
Good.
Investing portfolio. I can't talk today. Also, we only have one camera. Just a heads up. So you're going to see Fat Man Zoom text, and you're going to see me picking my nose. That's just how it's going to roll today, in case anybody's wondering. But yeah, man, I'm looking at the market right now. S&P's up almost 1%. The Dow's up 182 points, which is good for 0.5%. The Nasdaq is the big winner today. I'm sure comes to no surprise to anybody. It's up 206 points, still well off of its highs, granted, but it's good for 1.5%. Oil right now is on fire, on absolute fire. It is up over $3 a barrel today. It's at 81.47. That's good for 4.1%. Fat Man Zoom. That, I think, obviously, tech is the story of the day, but I think crude oil is also a part of that conversation.
Yeah, it certainly is, and it's been playing out like we talked about. Again, I think it's just in one of those situations where it's just not that that attention grabbing that like other stuff is, whether it's crypto, whether it's Tesla, whatever, stuff like this. We see it with banking.
Yep.
We even see it with housing to a certain extent. We see it with value dividend stocks, and we definitely see it with oil. It's not the sexiest, but man,
does it ever make you money?
Yeah, it's been on a nice run.
We take a look at Exxon Mobil right now, and it is up 4% as well. And you guys know that I'm a huge holder of Marathon Oil. That's up 5.5%. Monster move, almost to $19 a share. That thing is going the hell off. Fat Man Zoom. We look at OIH ETF for oil services, and that's up 4.33%. And then we look at the XLE as well, and that is up 3.33%. So just monster moves out of everything in energy. And so this thing, I think, one of the big reasons we can speculate as to why the energy sector is moving today is because of what you and I are experiencing here in Baltimore. And it's a huge cold front coming through. We're seeing, below freezing temperatures in the middle of the day, which is not I wouldn't say it's unusual for Maryland, but it's still damn cold. And all the Northeast is experiencing that, which brings on more, heat that needs to be provided to homes. Obviously, demand's continuing to go up. So that means that we'll still continue to see oil prices go up, especially since we're not seeing anything as far as increase in production to really amount to anything. And I think that that's what's going to potentially take this to $100 a barrel leading into the end of the wintertime. I think that we could easily see that by the end of January, maybe beginning of February. Certainly seems to be on that trajectory as long as this continues to move up.
Yeah, certainly. And obviously we're seeing the response in that way. I think, one of the questions is as far as that particular topic, and Zane Khan brings it up, and that's, should we chase energy now since it's already made a huge run, or wait for it to cool down and buy on the dip?
Yeah, I mean, it's a great question, Zane. I think that I would be hesitant to chase it at this point. Maybe wait for a pullback or what have you. But I think if it were me and I wasn't in energy, I think it'd be irresponsible for me to just start buying it today. That said, I do think that there is still room for this to go up. I know that it probably seems like I'm kind of talking on both sides of my mouth, but if you're not in it, and you don't have substantial gains on it, like myself and maybe some of the other folks in the Chaos Crew, I think that I probably would just hold off. I actually considered trimming a little bit of my marathon today, just because I have so much of it and it's taking up a huge chunk of my account at this point, especially with the monster move today. So I think that that's going to be my plan, manage risk a little bit. But I think that, there may come a time where we hear news, right, that the White House addresses this, and maybe they somehow come up with an idea to tap into the reserves or something like that. There's always something that brings oil down. It's a very volatile commodity, so I think that could be an opportunity, but I think it still goes up from here overall.
Rudy Brown also talked about trimming out, just popped out a half of MRO calls.
Hell yeah.
For 103% profit. Nice trade. Good work.
Yes, sir.
Another stock I wanted to talk about, and sort of the question that we'll get into that kind of is piggybacking off Zane Khan's question, is things that are hot and where to look and what to look at. So we will discuss that. But I want to talk about a few specific stocks. One, a lot of people are talking about, which is Drive Shack. What's up, Snookeroo? Says, what's up with Drive Shack, baby? Drive Shack. A lot of people in our community here in Drive Shack are happy about it. Janko said Drive Shack was strong. Housekeeping says Drive Shack is ripping. All good stuff. I know that's something that we've been waiting for. We've been excited about, but the reality is Drive Shack is still only at 156. At what point should we be excited and confident about Drive Shack?
I don't know. We take a look at the chart, and I would say that I wouldn't start to get really excited until we got back up over $2 a share, which obviously is about 25 to 30% away from here. So I think that, while this is a nice little move, we've seen 5% moves out of Drive Shack before, and the volume doesn't necessarily seem all that crazy either. So I think it's just a great day for Drive Shack until we see something substantial as far as the catalyst is concerned. That's what's going to really excite me, but I'm not going to be mad about a 5% day. That's for sure.
Yeah. And we've seen the volatility of Drive Shack, and that's kind of why I brought it up. Was 5% day is great for Drive Shack, but I would just caution everybody, just because of the speculative nature, just because of the sort of the evolution of the business, or sort of the life cycle of the business, is still very early on. So there's a lot of question marks around Drive Shack, around revenue, around profitability. I am bullish. I am optimistic.
And we're back. Sorry about that, folks. I have no idea what this shit. We'll get it figured out at some point. But what were we talking about?
Just Drive Shack, and just to be careful with it.
Yeah. So Drive Shack is going to be something that obviously we know that we've been pretty vocal about this for the better part of 2 years almost. It seems like that Drive Shack is going to be something that it's going to be one of those things you just hold on to forever. That's kind of our conviction on it. We're not worried about what's happening on today, tomorrow, next week, next month. We're more so looking at this in the next few years as to what Drive Shack looks like. So going to continue to be just mindful of the moves on, in the short term, but really kind of looking at this from a big picture standpoint.
Yeah. Yeah, absolutely. So, I also wanted to get your sentiment. So I too am having a pretty good day. Sam was the only one that didn't come back, but it's still looking okay. It's holding up well. I would have loved to see that one red green in my account. But I want to get into the topic of the day, and I think there's going to be a longer conversation, and maybe we can take some questions at the end if there's still some time. But as far as what's going on in the market, so.
Yeah.
Pre-market looked pretty good. Market open actually didn't look great. Fell off. Then around like 10:45, the market started moving up. Qs just went off. I think really the question when we've talked about volatility surrounding the market, we've anticipated that Q1 would be choppy and kind of cautioned against it. And obviously, as we go into earnings, it's going to be interesting to see how earnings play out.
Yeah.
Let's talk about how do you feel about how today played out as far as in the context of moving forward? And then additionally, what are you looking at in light of that?
Well, to me, I mean, I know there's a lot at play as far as fundamentals are concerned, but to me, with the Q, so this is the QQQ, it's a Nasdaq 100, and this is very telling to me. We talked about this yesterday, that this is make or break. If this bounced off of the bottom of this trend, and we're going back 18 months on the Qs now right now. Let me adjust this. So this is a daily chart. We're going back 18 months, and really since June of 2020, this has done nothing but kind of remain in this ascending channel. And I think that, in my opinion, this probably could be the start of a really nice run up, especially as people start to get more excited about earnings. And until we hear from somebody, from a company or several of them, that earnings expectations are expected to falter, I think that the Nasdaq continues to move up until after earnings, and then we hear from the Fed again about potential rate hikes and all that good stuff, which, in my opinion, also is going to impact what you own here, because we've talked about this several times now for the last who knows how many months. But owning quality tech is going to be the way to go. Companies that are making money is going to be what you want to be in the event that we hear from the Fed about a rate hike, and we will. That's going to be a thing. Jerome Powell just got put back in today from Congress. I don't know if that's official. Let me just walk that back, because I think it is official, but I didn't get a chance to see if that was final word. But all systems go as far as Jerome Powell is concerned. But I didn't know this, Fat Man Zoom, and I didn't realize this. But the last 4 times that they raised rates, the Fed decided to raise rates after a period such as this. The S&P 500 corrected 10%. The last 4 times, 4 out of 4 times that we experienced a recession or some sort of downturn, and the Fed goes and raises rates, the first time they do it, there's a 10% correction in the S&P 500 on average.
Wow, that's interesting.
Yeah. So, I mean, there hasn't been a situation in which it hasn't happened before, but here's my thing. I think that we're in a moment in which is a little bit different than those last 4 times. And I'm not here to say that we won't see it, that we won't see a 10% correction in the S&P 500. I think that there's certainly a distinct possibility, and a really good possibility, that actually happens. But I think there's potential for a correction to not be nearly as severe as the previous ones, because everybody knows it's coming. right? Everybody knows it's coming, and the underlying stocks and the major markets and the major indices have really corrected far more than that. I mean, we look at some of the tech that's corrected, and even some of the other good staple stuff. We saw Microsoft correct 10%. Like, I think, in my opinion, when we look at that, the correction's kind of already happened, with the exception of a few giant stocks that's held the rest of the market up. So the correction that could come when rates go up might not be as severe as some might think.
Yeah, it's a balance. It's a balance with using historical data, and trying to determine what's going to move in the future.
Yeah.
I also would say, I mean, there's much different factors at play in the market. Just playing devil's advocate, there's much different.
Yeah.
There's a lot of people who haven't been through a rate hike before,
right?
And so it'll be interesting to see how they play towards that. And how obviously the institutions largely dictate it. But yeah, I mean, we'll see. It just speaks to really making sure you have a well-diversified portfolio, you have strong companies, and you're doing your due diligence. And as long as you do that, you should be in good shape. And obviously, having cash on hand, just continuing to add to your account, to dollar cost average, and to scale into products, that still always wins.
Yeah, 100%. And it's just so funny how, we look at some of these trends and they come down to test the bottom, and they just bounce right back. At this point, in my opinion, I don't know why I keep saying in my opinion today, but I do think that we could see a bounce, going into the end of the month, maybe going into earnings, and then that's when the fear starts to kick back in. But that's just going to continue to follow the trend here. And so who knows what happens, after the Fed decides to raise rates. But to your point, diversifying your portfolio for sure. But I think also the theme should be making sure that you're mostly in quality. If you want to take a gamble on some stuff that is a little bit more speculative, sure, makes sense, especially, as things start to bounce here. But I still think that owning quality is going to be the way to go. As boring as that might sound, I think that's going to be how everybody makes money this year. And until I see something different, I'm going to stick with that.
Yeah. Yeah. And also because they have such, fundamentally, they have such huge upside.
Yeah.
And so we're seeing it with our dividend bot. We're seeing those opportunities, and that playing out in that way. And there will be a time where these other stocks that have been beaten down have a run, they come back, and they have their time sort of in the spotlight, much like value is currently sitting. You go to 2020, it wasn't that way for value.
Yeah.
And so, or really 2021, if you look at the beginning of 2021. But all things are sort of cyclical and come through. I mean, somebody was kind of joking about your bearishness on oil, but it just speaks to the market conditions and what's going on at that certain time.
Yeah, I think it was James McRae was talking about that.
It was.
And he was saying, remember way back on this channel, and that was pre-pandemic. So pre-pandemic, demand on oil was in the shitter. Like, there was nothing to like about it. And now demand is much higher than what it was pre-pandemic in 2019, which is crazy to think about. It was going to continue to go up more than likely, especially as production goes down. I will say, and I've been pretty vocal about this too, that oil isn't going to be a forever stock to hold on to. To me, I think, the next year, maybe the next 18 months, energy is going to be the stock to hold. And then it's going to, I think, come back down to earth. But, we'll see what happens. But dynamics change, things change, and you got to be able to move with the market. And at the time, it seemed like oil wasn't going anywhere. But now it certainly seems like it's going up. And we're going to have to see some sort of bridging of the gap, so to speak, between fossil fuels and renewable energy. It just obviously doesn't seem like we're there yet. And demand is crazy. So until one of those decides to give way, oil's probably going to keep going up.
Yeah. I mean, you were kind of like a little bit too much on the end of the spectrum of like oil's gone.
That's true.
That was a little like probably a little month or two time frame where your thesis was long term, but like you were very much like, it's dead. I think that's been walked back a long time ago.
It has.
I just want to say, Don, I'm not a doctor, but I did stay at a Holiday Inn Express last night, and you have COVID, my friend. You don't need to get x-rays. There you go. I've settled it. I love how people get COVID and try to do anything to like just double check. Maybe it's not. Nope, bro, you got it.
Oh,
Again,
no.
welcome to the club.
That's hilarious.
It's just the thing. Don said oil can still go away and stay at $80 a barrel to the end. It's still supply and demand of what's made and used.
Yeah, I mean, they're just not they're not producing it like they need to keep up with demand. So, and nobody's motivating to do that. There's no motivation to just pump more oil. So until somebody kicks their ass to do it, says this is how it's going to be.
Couple questions generally for you, Brad. Thoughts on the CPI? That's tomorrow, right?
CPI is tomorrow. They report tomorrow. So consumer price index, that usually kind of, if you guys don't know, that's something that gets reported each month. We kind of get a litmus test or take the temperature of inflation. And right now, obviously, we know how hot it is. I think tomorrow comes in a little bit lower than what we saw in December. A lot of reasons for that. One of them, obviously, I think demand has waned a little bit, not a lot, just a little bit because of the holiday season. I think it's obviously a little bit hotter during December and November. But also there's reports of supply chains easing a little bit. Again, not to anything major, but if we do see a smaller or lower CPI number than what we've seen in the past, and inflation seems to have peaked, which I think it has, then we could see another rally tomorrow. Now, if on the other side of that, if we do get hotter than expected numbers, then we could be in for a rough day. So while we're having a great day today, could all go in the shitter tomorrow. But nevertheless, I think, in my opinion, my theory, my prediction is that we see a lower CPI number than we saw in the last few months.
Parag asked, did you cash in on your MRO January 28th calls?
I did not. I'm actually going to do that right now. We got 8 minutes. I'm going to do that right now. I'm selling out of that.
Jeff Panika, Walmart, January 140 calls. My worst performer today.
Damn.
Listen, we can't win them all, friend.
Yep.
You have January 140 calls. What's the expiration? January.
I got
what?
Me?
No. I'm just talking.
Oh, so any of you guys are in the Chaos Crew, part of level 2. I am selling my 18.5 calls for January 22nd for Marathon Oil. Doing that right now, closing out, locking in those 100% gains. I still have plenty of Marathon Oil. I have $20 calls for April of 22, and those are doing really well, but not anywhere near close to wanting to sell those. But I told you guys I bought more Marathon, and that was those 18.5 strike calls. So I'm out of those, locked in some profit today. Feel good about it.
Ask and you shall receive, Darren Anderson. Fat Man Zoom, would you please make Brad pull out his crystal ball and tell us what is going to happen this week?
Let me see what I got. I don't know. I think to Don's point, like I said, like I had mentioned before about CPI, if CPI comes in, which I think it does, comes in lower, it would give an excuse for an extended rally. We've been talking about this correction in the S&P 500. There's nothing saying that the S&P 500 can't hit 5,000 before the correction happens. And I think that's more the likely scenario. And maybe we're seeing the start of that today.
Yep. So Snookeroo, how about them dogs? Yes, Georgia Bulldogs. Go Dogs.
I was wrong.
I think about what? You're wrong about a lot.
About Alabama winning.
Okay, cool. Well, I mean, we text about it, but you were like making me question myself when you were saying
I was so confident.
Like I was like,
wrong
Alabama needs to stop winning. You're like, well, Georgia just won last year. Well, if last year was 40 years ago, then yes. But I didn't even think
as soon as you said it, I was like, wait a minute, Mac Jones and Devontae Smith, they were all in that. I was like, why did I think that they won last year?
Yeah. I mean, yeah. So that was like the bigger thing you were wrong about.
I was so wrong about that.
And I'm like sitting here thinking I'm crazy. And you're like, yeah, a great game. Great game. I can't say I'm surprised. I actually had Georgia. But I'm just happy it was a good game. It was awesome.
I don't know if you saw this. Did you see your buddy Eddie Barstool bet on Alabama?
Yeah.
And he was crying in his lap last night.
Oh, really?
Yes.
Speaking of, I know a couple of you asked about the lighting. The reason why the lighting and the cameras are what they are today is because we actually had to move them to film the story of the breakdown. So the breakdown of how I crashed Barstool Sportsbar's private party in Chicago, that has been filmed. Obviously, it's going to get sent off to editing, but that's why that's moved away. We had to move it into a different room. So we'll be back normal tomorrow.
Yeah. If Jeff Chow is listening still, sorry about this one, bro. It's going to take some editing on your part for sure. But it's going to be good. It's going to be good.
We're carting weed. So that'll come out this week. And then I'll actually be giving my review on the sports bar just as a bar. We'll do it on the live stream. Likely we'll be doing it for Monday. So the market's closed on Monday. So instead of Stock Watch Sunday on Sunday, we're going to do it on Monday.
Yeah.
Only because I'm going to be traveling. So definitely tune in for Monday. Definitely hit that subscribe notification bell. I took really good notes when I was at the sports bar in Chicago. Their first sports bar. I was really just curious about how it would look and what it would, really, what is the potential for it and how should that impact Penn? We're going to have all those conversations. I really dug in when I looked at the sports bar. So I think it should be some interesting conversation, and that'll be a large part of the conversation on Monday, 7:30 p.m. Eastern time.
I'm actually pumped for that. Because we haven't even really talked about that a whole lot.
Yeah.
So giving some boots on the ground due diligence.
Social arb.
Yeah, social arb on the bar itself.
Yep.
And kind of looking forward to what happens in Philly too, because that'll be the next bar that opens.
Yeah, Philly slated to open Barstool Sports Bar Philly. Either so early February, either the championship weekend or Super Bowl weekend. I would imagine they would want to get open for championship weekend. That way they're already rocking and rolling for Super Bowl. It'd be really hard to execute opening Super Bowl weekend. But nonetheless, we'll see. And we'll certainly keep you guys posted on the dates and how it's looking. And once we get word of when Philly's going to open, we'll let you guys know. But it's exciting what Penn's doing and what Barstool's doing, how they're growing, and really their marketing approach. I don't know how much we're going to talk about this on Monday because it's more just about the bar. But again, like just another example of how Penn's doing it differently. And I actually talk about this in our channel. It's so easy to just sort of like follow the herd.
Yeah.
And it's really hard to think outside of what's normally happening and the way people do things and do something new and not just try to like repurpose what's existing. Their marketing approach is incredibly impressive and how they go about their business. I love it. And I think while it's playing the long game, I think it's going to establish them as a long-term winner, hands down.
Yeah. I mean, and really the sports betting side of things has just been wreaked by COVID wreaked havoc on all of them. We're seeing some really nice moves, but I made mention too of Penn National. I know that we've talked about it a lot for those of you who regularly watch the show, but the valuation here is a joke. The market cap's at $7 billion. You look at MGM, it's around 20 billion, and even DraftKings, as much as that's come down, the market cap's still higher there as well. So, Penn National, I think just it has come down too far, and with everything else that they have going on, this is worth way more than $7 billion. So I think that, in my opinion, I agree that this is something that's worth going at least pretty heavy on at these levels. It just makes no sense for it to be down here.
Yeah, their earnings are going to be interesting. A lot of also the move down because MGM's chart doesn't look like this. Let's be clear.
Yeah.
And so a lot of this also has to do with things outside of the control of Penn as a company and more like public sentiment, Dave Portnoy stuff that we believe is really non-material when you factor it into as far as when it comes to the stocks concerned and the performance and the future expectations of the stock. Make no mistake about it. Barstool, or Penn's stake in Barstool, they have the option to increase it from 36% to 50% at the beginning of 2023. There is no doubt in my mind that they will exercise that option and they will take advantage of that.
Yeah, I agree.
So
I agree.
that speaks to their sentiment around Barstool as well, and going to be a driver for them as a company as a whole. Yeah, so we'll keep an eye on that.
I love it. I took this question away because I saw it was up there, but I did want to get back to it. We didn't forget about you, Wakar. But Wakar was asking about Cleveland Cliffs. He says, what's your thoughts on Cleveland Cliffs? I sold around 50% of it recently, taking profit. Do you still think that it has room to move in a positive direction? In the short term, 3 to 6 months is your timeline. I think it does, especially when we're looking at, rate hikes and that sort of thing. This is a company that still makes money. The balance sheet's incredible. The CEO is amazing. Steel isn't going away. And in fact, we're continuing to see increased demand for that as well. People think that because over the last year, we've seen demand so at such a high point that, it has to wane at some point in time. But the fact of the matter is that we're still seeing supply chain issues. And as long as we still see that and demand isn't going to go away, I think Cleveland Cliffs has a lot of room to run, especially with the infrastructure bill that still needs to go through, or not go through, but still needs to be carried out. And so I think that Cleveland Cliffs still very much goes up. Now, I will say that taking half of your position size makes a ton of sense, especially if you're up a lot. But I don't think that there's anything wrong with holding on to it and kind of seeing where it goes. Maybe you put a stop in if it breaks below the 50 and 200-day moving average, which are intersecting right now. Maybe that's where you kind of take the rest of it and see where it goes or what have you. But at this point, it seems like you're playing with house money, and you can kind of do whatever you want with it.
Yeah. This kind of leads, kind of how the chart's set up, kind of leads to the next question by Jonathan Schreiber. If percentage-wise you're still down in a stock, but that stock has a great day, do you take some profits or continue to hold until you're in the green? What say you, Brad?
That's a great question. Unfortunately, it's a complicated answer. I think it just kind of depends on what type of stock it is, what your conviction is. We just got done saying about how we think the Nasdaq and tech is really going to continue to go up. But there's definitely something to be said for, if you're bag holding something and you see a great day on it, taking it and kind of taking your losses and moving on and learning the lesson there. But if you still have high conviction on something and it just made its first move on that day, then maybe there's something there worth holding on to. I really don't. It really kind of just depends on your situation and how much you actually, what your conviction is on that particular stock.
Yeah. I mean, I think the one thing we have to remember, I get really interested in the psychological side of trading. I get in the same thing in management as well. I've always been interested in sort of how our mindset works.
Yeah.
And, what I've noticed is it's funny because we'll sit in something red forever, but then once it starts moving green, we get antsy and we get impatient. And I think we fear the worst. And that's very common. So I think doing your best, Jonathan, to take the emotion out of it, to take your current situation out of it. Okay, maybe it didn't make the move you expected it to make. And just looking at the picture for what it is, I think that is a bigger part of the process than just looking at what you have, right? Yeah. So let's give an extreme example of this. If I was in in my Fat Man Zoom account, which I don't sell, I just add to it, Zoom is in it, and Zoom's down whatever percentage, 40% or 30%, whatever it is.
Right.
And I'll dollar cost average. But if that was one that I was thinking about getting out of, I don't care about what my cost basis isn't as important at what the trend says, technically. And so when you look at that, clearly in a downtrend, the macro environment says that it's probably still going to be a tough go for Zoom. I'm probably more worried about sort of mitigating my losses than I am about getting that back to green.
Yeah.
Again, this is long-term, so that's not going anywhere, and I'll continue to add to it. But in that situation, even me adding to it, I don't even consider adding to it. I haven't even, I kind of set it and forget it because it hasn't given me any indication that it's reverse trend or ready to move back up.
Right.
And so I have to look at it as the here and now, not as, hey, you got in at this rate or you're down this much or you're up. You just got to kind of look at it for what it is.
Yeah, I agree. I agree wholeheartedly. I see Daniel Camarena in the house. Shout out Daniel Camarena. What's up, bro? Good to see you.
James McCrea, did I say no? I didn't say MGM's chart was ugly. I said it wasn't as ugly as Penn. Like,
Yeah,
MGM's chart isn't that bad. Like, Penn's chart is worse than MGM's chart.
MGM has, yeah, it's had corrections here and there, but if we look at MGM, that's a beautiful chart. It's consistently stayed above the 200-day moving average, with the exception of this correction. And this is when Omicron really kind of reared its ugly head on Black Friday. But that was kind of my point of what I was saying about how COVID's really wreaked havoc on these stocks. I mean, look at where it bottomed out at. If you guys recall, for those of you longtime followers, I talked about MGM being one to buy and hold back here in May of 2020, and it's gone up a ton since then. So small corrections here and there makes sense. But here's the Penn chart, and this is the one that blows my mind the most. You just look at this, and it's down, over 50%, around 60% from its highs. It was at 142 almost a year ago. And here we are at $48 a share at $7 billion valuation. To me, this makes no sense. And to me, I think this is the cheap one to buy versus all the other ones. Not to say that they won't continue to go up, but I think this has the highest upside at this point.
Yeah, I agree. It does. I mean, it's not the safest, but it definitely does. And when it starts coming back, it's definitely there's going to be some stops along the way, but I think it's going to come roaring back, if I'm being honest.
Yeah.
But what would you think those catalysts would need to be for Penn?
The first one's going to have to be profitability. Even though they've talked about how they could be profitable now, nobody cares. They want to see it today.
Yeah.
They want to see it last quarter. So I think if they can talk about how they're either going to be profitable next quarter or in the very near future, then I think that's what gets it going. Obviously growth as well, but I think that's going to be the biggest one, is just, are we going to be back to profitability and when's that going to be?
Yeah, absolutely. And I would agree. I mean, they've Jay Snowden's mentioned it a couple times, and the Score acquisition was, I guess, an opportunity that was too good to pass up.
Yeah.
On one hand, I respect that he's willing to, like, say, hey, I had a plan, but this opportunity was something that's going to pay dividends. Right. So I respect that he's looking at it from a long-term perspective, but also, again, like, they're betting that Barstool ends up winning for them long-term. And, COVID factored into that because they didn't have the Arizona Bowl. Arizona Bowl could have been what had put Barstool back on the right track, sort of in the good graces of the public, and then subsequently boded well for Penn as well. These Barstool sports bars, we'll sort of talk about what that means for them. They could have maybe 10 this time next year, 10 sports bars by this time next year, which would be really interesting on how that profitability works as far as Penn's concerned. So, it's definitely been a tough ride for a lot of people, but I mean, I agree with you. Fundamentally, this is screaming a buy.
Yeah.
And they should be the quickest to profitability out of any of the online sports betting companies. I mean, maybe MGM, you can make that argument, but I still see Penn doing it.
I would think so. And I mean, you talk about the amount of money that gets spent on marketing from all of these platforms, and Penn spends the least, and they still have reasonable growth. So, they leverage that Barstool crowd, the Stoolies. And, I think that saves them a ton of money in spending. And so that's why I'm like, okay, can we get to profitability? Because there's a lot of people, a lot of investors that want to see that. And then I think the conversation becomes louder and louder once they're profitable, and they're like, oh shit, they're not spending any kind of money on marketing at all. What happens when they do?
Yeah.
And so, we look at Caesars, they talk about spending $1 billion out of their balance sheet on marketing. And we've seen commercials all over the place, but they're still not making money on that, on those marketing dollars yet. MGM is still also in that same boat. FanDuel, even though that's not publicly traded, DraftKings, all of them are spending stupid amount of money to do the big ass land grab, which I respect. But at the same time, Penn's in that mix. And so if they're doing it, if they're continue to be in that conversation and they're not losing anywhere near the amount of money that these other platforms are, at some point, I think that we could see a shift in the way that Penn actually grows this thing because they can do it profitably as well. I mean, who knows? Maybe something like a DraftKings ends up getting picked up by somebody, because I don't know how they survive this, just continuing to grow at all costs, and they're really not making any money at all.
Don Front, how dare you fall for House Music Nation's comment, stocks are dead? That comment just clearly shows you're not going to get a legitimate response on how stocks are dead. I'm almost like, I will bet whatever that there is not a solid thesis behind that.
No.
But what I will say is you're smoking crack, House Music Nation. That literally, if stocks were dead, like literally, if our stocks were dead, we wouldn't exist as a society. Our society would collapse.
Yeah.
Because that would mean all our public trading companies were dead. That makes
I don't even know what that means.
I say that with all due respect. That's the most ridiculous comment I've heard today.
Yeah, it's a good one.
Maybe there's an off chance he's brand new. Maybe. I mean, that seems like just a comment just to try to
just
stir the pot.
It worked.
But I actually wanted to use that to pivot over to crypto. We haven't talked about crypto in a while.
Yeah.
I don't know if I said it on the channel or not. I think I did. I got into Solano. Did I tell you that?
No, you didn't say that.
Oh, so I've begun slowly exercising a position in Solano. This is a couple of weeks ago. So Bitcoin, Ethereum, Solano. Man, crypto's had a tough go with the rest of the overall market. What do you think about crypto as a whole, and where it can go from here?
This has been tough to watch, man. I still feel bullish on Bitcoin and crypto in general. I don't think that we see this actually move until the latter half of the year. I still feel like $100,000 Bitcoin is on the horizon, and I think that we could certainly see it this year. It's possible.
Yeah.
I mean, the average return on, and I know that a lot of people kind of shake their heads or scoff at it, but the average return on Bitcoin since its existence has been 200% a year. Last year we saw it move up 400% or something like that. So stands reason to believe that we see this cool off a little bit before the next move up. But the stock market is what, a 50? Oh man, I had the number in my head. What's the overall stock market? The amount of money that flows in. I want to say it's like $25 trillion goes in and out of the markets, or it's held by institutions, what have you. It's a lot of money, obviously, right? Unfathomable money. Bitcoin's still $1 trillion market cap. So I think that, in my opinion, there's still a lot of room to run here. And that could happen to this year after interest rates. And when we looked at how interest rates went up and how Bitcoin reacted to that in 2017, 2018, that it wasn't great, right? We saw a bit of what you would call a crypto winter, as some people would coin it. So I think that we see a little bit of that probably in the first half of the year. The difference between now and what happened in 2018 was that there was really no institutions involved, and now there is. So I think in my mind, that this is something that is just going to be temporary. If you can weather the storm, I think you'll be in good shape.
I'm not sure if you can pull that up, but I don't think Bitcoin was anywhere near up 400% last year. I don't even think it hit 100. I know.
Oh, it did hit 100.
100%?
Easy. Yeah, because it was like 20. Here's
2021.
Here's the monthly chart. Let's go to. We'll just guesstimate. So it ended 2020 at 18.8. Looks like thereabouts, and it went up to 60K, 69K.
No, that it's not 18.8. It started. The first trading day was 30 or 32K, 33K.
Here is December 31st of 2020.
Where's January? Where's January 1st?
This is the monthly chart. So this is January 31st, 28.
Okay.
Let's go to the daily chart. I can scroll it out if we have to.
I mean, even 18K
to 69.
Was it at 69?
69,047 was the all-time high.
No, I'm not saying all-time high. I said what did it end the year?
By the end of the year.
Yeah.
Ended the year.
Somebody can calculate. Somebody that has time on their hands calculate that.
Yeah.
I don't think it was 400%. I could be wrong, but you also said Alabama or Georgia won last year, so I'm questioning.
Maybe I'm thinking of 2020 it was up 400%.
2020, that is, yeah, I believe that. But I don't. Ethereum outperformed it last year, and Ethereum wasn't up 400% last year.
You're probably right. I'm not going to argue that too hard.
Yeah. I mean,
anyway, it went up a lot.
But like we're seeing the same thing with Ethereum. If you could pull up Ethereum's chart, yeah, it's about to crack below, I think, 4K. Or no, sorry, below 3K. My fault. 3K, getting below 3K is a very big possibility.
Yeah.
I mean,
we're below the 200-day moving average by a lot right now on Ethereum. And that's the scary part because you don't know where it's going to stop. Once it gets below those 32K January 2021.
Yeah, I think it opened the year at 32K.
Did it really that high?
Yeah.
All right. But thank you, Chris Edwards.
What I was going to say was just, I think the big question for me is just like when to average, because like there's not a question of like me selling out of it. I'm actually okay if it continues to drop because crypto for me is not is a long-term play. It's not anything that I'm getting out of anytime soon. Yeah, I don't love seeing my gains being eaten away.
Yeah.
But my dollar cost average is below $1,000, or my cost basis is below $1,000 on Ethereum. But just really the big question is, when am I going to add to this opportunity for me with Ethereum? I don't know if it's going to get back down to 2,500, but that's where I would start really taking a hard look. But we've seen, moves down like this in crypto. I just don't hear anybody talking about crypto right now, maybe because they're getting their ass handed to them.
I know. Well, and I'm no expert on crypto, so I can't give a whole lot of context to this. But to me, it looks like if I'm just looking at the chart, I think that there's potential for more downside, and I wouldn't think about getting back into it to at least try to get back to the 200-day on Ethereum, just because I want to be on the right side of the momentum, rather than the downside. And Bitcoin kind of being the same thing. Where'd it go?
Oh no, never mind.
But Bitcoin kind of being the same thing. I want to see some sort of reversal. Yeah. We're well below the 200-day. We're well below the 50-day, obviously. So I want to see it get back to those levels. I want to be on the right side of that momentum.
I'm going to get to your question in a second, Darren. As we wind down, what I wanted to say, Brad, was didn't you get? I know you got like Shiba or something, but like, didn't you get Bitcoin or did you not get Bitcoin?
I have a small amount of Bitcoin, okay. Yeah, just because I wanted some exposure to it.
What's your strategy as far as that's concerned? Like,
just to buy on
adding, or when you're not adding to it?
No, I think I will add to it at some point. I don't know when that's going to be, but like I said, I think the most logical thing is like maybe if it comes back to revisit, a 200-day moving average, because it's done extremely well. Every time it's popped over the 200-day moving average, it's done extremely well. So that's kind of going to be my game plan. Maybe there's a situation in which I'm like, okay, this is stupid low and it doesn't make any sense, and I could start nibbling at it. But that's going to be something that I keep my eye on there.
Charlie Connor, Bitcoin and Ethereum, Solana, that's literally all I have. Long game, dollar cost averaging 5% of the portfolio. That seems good. That seems down.
I think that's reasonable.
Yeah, I just kind of like have side money that I wait for opportunities to dollar cost average, but maybe on a bi-monthly basis that happens.
Yeah.
Wakar says crypto in most has been trading similar to Nasdaq for some time now.
I wouldn't say that.
Yeah. It's going to be, I don't know what turns it around. I did want to get to Darren Anderson's question. Have you bought any digital art yet? No. And I doubt you'll see me buying any digital art or hearing about any digital art.
Yeah, me either.
Anytime soon. Definitely not this year. But
NFTs are in a bubble. I firmly believe that.
But as far as digital art's concerned, I would love to, our artist that painted this mural, his name's Vinny Hager. He blew up like right after he did this mural.
Did he really?
Yeah, he blew up.
Oh, I didn't.
In the NFT game. So he's
No shit.
yeah, like Harvard did if you go to his YouTube or sorry, his Instagram, Harvard did actually an article about the NFT art game, and his art is featured in the article.
No shit.
Yeah. So
Wow.
he's like, he was at Art Basel down in Miami. Like, he's been crushing it. Apparently, that's the word on the street.
He does phenomenal work.
I've been told, I don't know if this is true or not, but minimum 10x is what that would cost if we had done it right now.
Oh my God.
Yeah.
We have like so much money on the wall right now. That's amazing.
But that's something I want to talk to him about, and I want to hear about like how that works. And interestingly enough, we have the black wall back there that you can kind of see. That's it right there. There's another artist locally that we've been, there's always been a thought that we could put her art up. And she's actually considering putting her art on NFT. So that's another thing I want to see, just to get exposure to NFTs from the perspective of how the process works. Not necessarily buying them, but like, can we get art made for that wall? And can that art be turned into NFTs? Since she's interested in that. So yes,
bro,
that's what we're gonna be doing.
Like,
you're gonna give the idea that Don just said?
What? No,
what were you gonna say?
No, I'm just thinking about like our wall.
Yeah.
Like that's worth something now. I mean, not that it wasn't before, because we loved it. Like sentimentally, like it was just cool, right? It was cool, but like it's got potential monetary value to it. I mean,
yes.
Our the people that we lease to can just be. We have to tell them not to ever cover that wall up.
Not to mess with that. Yeah, I mean, I think that's the idea, Don, is, I'm just interested in how the process works. So when you say create an NFT wall and sell it, well, that's exactly what I just mentioned. Like the conversation is she's interested in NFTs. And I'm like, well, we've been talking about doing an art wall anyway. Why don't you pursue creating those pieces of art as NFTs?
Yeah. And
sort of look at the opportunities there. It'll be interesting. I just want to know how that process works, what it looks like from that end. If there's money to be made, great. But like, that's not going to be sort of our primary revenue driver. If somebody else can make money, awesome.
Yeah.
So, but I think there's so much value in understanding where it's at, what it's going to do. Because to your point, maybe it's in a bubble. I certainly don't understand these values that things are going for, but I don't know if I even have enough information to be able to say whether I think it's in a bubble or not. It's insane. It's really insane right now.
It's very insane. I will say this about NFTs. I'm with Kirby here. Oh, nope, not with Kirby. Just kidding. PW Coaching. NFTs are dope when you factor in the utility of some of them. Also brings a bunch of attention to certain artists. That, yes, but the utility side is something that I'm very interested in, especially as it comes to documentation via NFT, such as deeds to houses, right? Like policies for insurances or what have you.
Yeah.
Stuff that people still have papers for that you could turn into digital, NFT that you just never lose. It has its own digital fingerprint. So that to me is something that I think is very much in the future. Maybe the digital art side of things is a bit bubbly, which I do think it is, but that the use case, in my opinion, is not. And I think that is actually the future.
Well, and I've talked about another example, which I think is even a bigger opportunity, is a fee royalty structure. And we think about sports teams. Mavericks will be the first one to do that.
Yeah.
You can sell tickets and the third-party companies that resell the tickets, you don't get a cut of that if you're a sports team right now.
Right.
Now but with NFTs, you can actually attach that royalty structure, and it could be nominal, it could be pennies, it could be 1%, whatever it is, 0.5%. But every time it gets sold in the future, that's more revenue. So you think about, for example, the team that hosts the Super Bowl, and they sell their tickets and they get resold for like whatever, tons more, a multiple of X multiple, and they're getting nothing off of that. So they're going to be like, there's no way they're not going to move into that.
Right.
And so that's a huge windfall from that. I would argue, because you think about how many times tickets kind of exchange hands. I would argue that there's more money in the revenue, the resale revenue, than there is initially selling the tickets.
Yeah.
Which is incredibly lucrative for these sports teams. And sports make the world go around, whether you like it or not. Look at college, look at pros. They make the world go round. And if they move into that, everything else will fall into line.
Yeah.
I
agree.
Well, as we wind down, guys, thanks again for tuning in. Make sure you hit that thumbs up. We'll be back here tomorrow, 3:30 p.m. Eastern time. KB Holmes will report earnings after hours, so we'll definitely keep that on watch. We'll discuss the numbers, what that means, and how we expect it to react subsequently. So make sure you guys hit that subscribe button, the notification bell, to get notified when we go live tomorrow. We will see you then.
Also, if you guys want to watch this from us every single day of the week, make sure you hit that join button next to subscribe, or you could go down to the Own the Chaos webpage. That link is down in the description below. We put out a watch list that's very detailed, and you could support the channel if you guys want to do that. Please go check it out, and we'll see you tomorrow.
Bye.